Good afternoon. Thanks for joining us. And just to keep you between yourselves and the end of a long day, I'm sure, we're delighted to be here this afternoon to talk to you about a follow-on from the previous session, focusing on risk and entity-centric risk. This is a huge issue, 350 billion financial payments in 2025, an increase of nearly 30% on the previous year, 10.5 trillion in cybersecurity crimes this year, of which the majority or a significant proportion is fraud and embezzlement. Joe, let's start with you, if you don't mind. How do you sleep at night? And perhaps you look at the compliance landscape from where it was to where it is today.
So if I think about, John, how what fraud prevention looked like 10 years ago, it was very much a checklist. Is there a transaction over X amount in a high-risk country happening within a short time space? But if we were to follow that model, that would collapse very quickly, because what we see today is highly more sophisticated than that. What we're seeing now is sophistication, not just because fraudsters have far better tools, AI, all of that, but also because the digital age, right? After COVID, everybody went online. They were just more accessible. So if you think about it, globally, we're seeing, as you said, $500 billion of fraud losses year on year. It's not just card fraud. It's account takeover, authorized push payments. Account takeover in particular has really exploded over the last 5 years. And it's becoming harder to detect because these fraudsters arrive looking very much like our customers. Same device, same IP, behave this certain way. And so the things we're used to, the X amount over X time period, is almost like bringing a calculator to an AI fight. It just won't work anymore. What you have to now, we have to pivot and think in a sort of a different way, a way larger picture, looking at digital footprints. So not just looking at, is this transaction suspicious, but rather, is this person plus device plus network plus behavior legitimate? Does it look like a customer? Has there been a recent device registration? Is the IP addresses, network, or the beneficiary something we've seen before in other scam networks? So KYC itself is no more just a piece of paper that used to get filled and then put aside, right? Now I think KYC is more of a continuous streaming risk assessment. And I think the regulatory landscape has also helped push the industry in the right direction when it comes to this.
I was going to ask you about that.
Yeah, they've, for example, early this year, they mandated that all the fintechs, all the banks, all the LFIs basically move away from static SMS OTPs into using strong authentication methods. So you could tell that they're also now understanding that this problem is bigger than it is and we need to pivot around it.
Thank you, Joe. Rich, in your capacity as CLO, can you talk a bit more about that regulatory landscape? What's being mandated? So clearly the landscape has changed fundamentally in the last few years, so from 2022 to where we are now, a material change. What's actually being pushed on to financial entities?
Absolutely. So firstly, everything Joe said, I reiterate entirely. It's absolutely what we're finding out in market too. For me, kind of a legal and regulatory standpoint, I think there's the broader recognition now that the current approach to risk management, fraud isn't sufficient. Not only is technology expected to be used on the bank and the fintech side of the business, but is also absolutely being employed by the fraudsters alike. So really what you've seen is a convergence globally, particularly by the primary regulators on instituting and mandating effectively banks and financial institutions to employ appropriate and emerging technologies. So to Joe's point, the Central Bank of the UAE has actually been leading the charge. Earlier this year, they introduced a new law which for the first time actually mandated the requirement for licensed financial institutions to actually employ appropriate technology and actually very specifically mandated certain criteria that needed to be followed from, confirmation of payees is just an example. Looking at the US, similar. The Consumer Protection Finance Bureau equally has also been looking and expecting financial institutions to share data. And to that end, they've been looking at open banking. And Europe in particular. I think Europe's been at the forefront with DORA, the recent anti-money laundering directive, and also the payment services directives too. Again, expecting that all licensed financial institutions employ appropriate technologies to prevent the fraud.
Okay. Thanks, Rich. And Soups, you've clearly been looking at the space very actively from a sardine perspective. Do you want to sort of, anything you want to add to either what Joe or Rich have said in terms of the background, the backdrop to where things are trending to, and how the regulatory landscape is interacting?
Yeah, to add to what both Rich and Joe have said, right? So with the rise of AI-generated deepfakes and scams, right? As you said earlier as well, like, trillions of dollars are being lost every year, right? And with the new regulations that are being adopted worldwide around strong customer authentication, I feel like even those regulations are actually reactive, right? We need to actually go above and beyond what the regulators are asking us to do. So for instance, right, like when you are logging in, the general advice is that you have to have two factors, right? What you know, which is your password, and who you are, which is basically was always tied to an OTP being delivered to your phone number, because what you have in your pocket always is a phone number. However, there are now SIM swap attacks where that phone number doesn't mean much anymore. Somebody could actually port your phone number, right? And then there are, in reaction to the fact that there's phishing attacks where for instance, I could set up like a bank impersonation scam where just taking an example, like if I am a scammer, I would set up a lookalike to VO, and maybe underneath the O there is a dot, which a general consumer doesn't pay attention. They think that there's a speck of dust. They click on the VO with the dot underneath the O, and then they enter the password. Then I, as a scammer, what I do is I take the password and I replay it on the real VO app. And then I can go and provision a new virtual card, and then I can add that virtual card to an Apple Pay, Google Pay, and I can start spending, right? So therefore, with these rise in like bank impersonation scams, what is happening is that even those two factors are no longer sufficient, because as a fraudster, I have obtained the username and the password, and even the OTP that was delivered, I'm replaying all of it, right? So therefore, what you need is actually above and beyond it. And we at Sardine like to say that, you got to start looking at, consumer behavior. Behavior meaning like, how do you behave when you're interacting? Like if I typed in my password really at VO, I'm either using a password manager or the fraudster, when they are replaying it, they're going to copy paste it, or if they're using an AI agent, the AI agent is going to actually type without moving the mouse. So those are some intrinsic behavior patterns that we go after. And if so long as you capture all the behavior data points about a login or a payment or a sign up, you can always go back and find how the fraudster was behaving. And every fraudster, they still leave a tell. They still leave some signs which can distinguish them from real users.
Okay.
So I think just to Sub's point, I think back in the day we were profiling transactions. Now you have to actually profile customer behavior.
Yeah.
And that's not just one data point. That's about how they log in, how they type, in what speed they type their passwords, what devices they use, who do they usually pay and receive funds from. So it's almost like it's a continuous process, right? You're not validating one thing, but you're constantly validating them. So your rules can't be static anymore and one-dimensional. And I think previously, and this changed very quickly, the rules that you had could be tested by the fraudster, because all he had to do was basically guess what the thresholds were or the blacklists were. So you have to sort of like move away from that. And I think even the regulator now, for example, when we adopted moved away from SMS OTP and pushed it into in-app OTPs, we almost completely eradicated the SIM swap cases. Why? Because now the fraudster doesn't need to take hold of your phone number, because you don't get the OTPs anymore. The OTPs are going into the app. And then by doing device verification, identity verification to bind your device to your profile, you then also will only receive the OTP in one of those safe sessions. So again, multi-layered approach is what you need in today's world.
So if you require as much data as it sounds as you do now to create the biggest environment you can to focus in on individuals and the entity, how are you seeing the interaction between, for example, Rich, to your point, the US and the UAE? How are you allowing for that in your model? Because I assume that you require huge amounts of data to be able to provide, Joe with the ability to sleep at night. So, how's that interaction happening?
So in the case of our technology at Sardine, we provide a piece of software that banks and fintechs, they embed in their login flow or the sign-up flow or the payments flow, hundreds of kilobytes as an SDK, which you drop it into your Android or iOS app, or on the website, it's really 10 lines of code as an iframe. And then all the telemetry of how you type, how you swipe, how you hold the phone, mouse movement, etc., they're gathered like kind of opaquely to a client. The client is not really aware. And these are, if you think about it, these are actually privacy-aware data points, right? Because all software tools like us we are collecting is really just XYZ coordinates of your device orientation, right? There's no PII there except an IP address, which in some jurisdictions is considered PII, but in many others it's not.
And I'd just like to add that the whole idea of entity-centric data, entity-centric risk thrives on one thing, which is data, right? And I think that's where it's a sensitive topic. And I think that's where, as a bank, what we really think about is, okay, how much data can we collect? How do we store it, use it, and then how do we communicate it with the customer? Because what we want is enough data that will make sure that we have enough to protect you. But when you have too much data, I think you don't want, the customer gets uncomfortable with that. We're not playing Big Brother here. So we just want to be very clear that we're just taking what we need. If I think about, what are we collecting? So if you think of models and stuff, we don't really need a lot of personal data. What we're looking for is a digital footprint. Yeah, we're looking for behaviors. So and wherever we can, we'll use UAE Pass to replicate, instead of replicating documents. In terms of how we use it and store it, again, the models don't need your name. They just need, again, other data points, right? And where we can, we'll use pseudonymization or tokenization, encryption, and strict access controls around it. Then, of course, it's how you then communicate it to the customer. So instead of telling the customer, we're monitoring your behavior, because that sounds a bit creepy. You would want to tell them that, look, we're just keeping an eye on your account or your login patterns to ensure that there's no unauthorized access. And I think customers do appreciate that. But I think the idea is that we have to be designing this into our systems before, like on the onset, as opposed to thinking of it as an aftermath.
Got it.
Yeah.
And to that point then, around where you're seeing the kinds of risks, the kinds of attacks that you're all sort of thinking about and facing, do they change by jurisdiction and geography? I mean, are you seeing different kinds of attacks in the US, for example, suits as you might do in the UAE?
No, it's actually surprisingly very similar, because as the world economy has gotten more globalized, a fraudster who's sitting in, let's say, Southeast Asia, they are aware that they can use the same techniques to defraud someone sitting in the UAE or someone sitting in the US. And we serve customers globally, and we find that it's similar patterns everywhere, with like AI-generated deepfake attacks. Like during KYC processes, there's a lot of deepfakes nowadays. We also see a lot of rise in account takeovers. We see the bank impersonation scam that I talked about. So it's like very similar in nature now.
Okay, good. Rich, anything to add to that? I can see you wanting to jump in.
Look, I think Sips is the expert here, and Joe on actually what happens day to day from a fraud perspective. I think what I'd like to comment on is what we were touching on before in relation to the interaction of data and privacy. And I think what I touched on earlier was absolutely globally there's a regulatory convergence on the approach to adopt to preventing fraud, which is effectively utilizing technologies. Where there is some regulatory fragmentation at the moment is actually to what extent is data actually used and shared across jurisdictions and across different fraud systems to actually identify that fraud. And I think the short answer is I don't think there's an answer. I think we're still as a kind of a world trying to map out what the right mix is. I think it's definitely a watch this space kind of a brief, but at least me on a personal level, I'm optimistic about the use of kind of decentralized IDs and on-chain and tokenization moving forward as potentially a longer term solution. So I think that's the real interesting area for me, rather than the day-to-day account takeovers and obviously the thousands of pieces of technology that the Soups and his team are obviously implementing into their solution.
I think, Rich, this is not prevention and detection of fraud is not a new thing, and the regulatory environments interacting is also not a new thing. Clearly, this move to the proactive approach that you've been discussing today is a new thing and is obviously required given the sophistication of the attacks that are now happening. But do you not all think that inevitably, whilst it'll go in the same direction, there'll be some kind of sensible interaction to the extent that it becomes consistent, such that it makes it easier for the end user to understand why, to your point, Joe, they are better off? And I think actually it's really important that you reiterate this is about the privacy aspects are one dimension to this, but actually if you're looking at Soups through behavioral interactions, it is a slightly different conversation to what it was perhaps from a KYC perspective 10 years ago.
Yeah, no, 100%. I think one of the observations that if you make, right, like worldwide, what's happening is as a lot of payments are moving to faster payment methods, what has happened is that consumers and businesses are losing money very quickly. And we say that, with faster payments comes faster fraud, right? Previously, most payments were on cards, and card networks anyways had it all locked up. They have like the chargeback dispute resolution process locked up, right? But with the bank payment methods, there wasn't any, which is what you saw with the UK, with the authorized push payment scam, the regime they put together, and pretty much every other geography they will be putting something together. So that's what you're saying with the regulatory side.
Makes sense.
Yeah.
I think in the GCC as well, I think there's a lot of expats, a lot of movement. And so a lot of the customers don't know what to expect. And so impersonation scams here are quite big. And what we've seen is a lot of the time, there's obviously been a data breach somewhere. I know when I first moved here, the only thing I was doing was ordering food on Talabat and Careem. And then 3 days later, I'm like, okay, I've got my first scam call. And I was thinking, okay, I was trying to decide which one, where was that gap? Who gave out my phone number? So I'm sure that this is sort of, because when you think about it, we're in a country where there's so much movement, a lot of people coming in and coming out. And that for fraudsters is great because they have a lot of blue collar workers that they could just give out a bit of money, get them to open mule accounts. You have people who don't really belong here. So they think, okay, let me just do a bit of fraud, get back to my home country, and I'm out of it. But what is really difficult, and I think this is where my work, and this is probably what drives me every day, is I think about, all of us banks, we all have money, but I'm thinking about that general average person who's brought all their life savings to this country. Someone calls them up, and to Soup's point, money's gone out instantly. I had one guy who gave out 126 OTPs in a 2-hour phone call.
Oh my God.
And I remember asking him, but why? Why did you give it? And he said, the guy came on video call in uniform, and he was completely
That's a police
sold.
Interrogation scam, right?
Correct. And he was sold on the idea and just gave out all his OTPs. But the difficult part about it is, again, the speed. The money's gone, and then it makes it really hard for us to then recover it and try to get, thankfully in his case, we were able to recover half of his losses. But it goes to show to what extent the fraudsters, the attempts they take and how much effort they put into it.
Yeah.
So we're always going to be playing catch and mouse, like cat and mouse. That's always going to be the case. But I think the idea is to introduce enough sensible friction that you're not going to piss your customer off who's just now used to convenience. We are an economy of convenience.
Yeah.
So as you said, with convenience comes ample opportunity to defraud people. So it's getting that balance right as well. And that is where the whole, the entity-centric risk comes to play. Maybe Soups does, pay new beneficiaries all the time. Why? He's a business owner. But Joe, who's a retail customer, who only ever pays her landlord once a month and her electricity bill, shouldn't be paying some guy in Kenya a large sum of money in one go. So it's understanding that behavior holistically that will help us sort of at least combat and be able to take a step in front of any future AI-enabled fraud types.
Great. Thanks. Just conscious of the time. So it's obviously come a long way. Soups, I don't know whether you've got any observations as to where you see patterns and trends going in the future.
Yeah, so I would go back to one of the sayings that resonated with me, which is that Warren Buffett has said that fraud will be the biggest business of all time, right? So we just as consumers and businesses, we have to be very aware of that fact and make sure you don't trust any incoming call or incoming text message because there's a fraud lurking somewhere.
Yeah. It'll keep getting more sophisticated.
Yep, 100%. Yeah.
Joe, what about yourself? What are you seeing at WEO? Where are you seeing this going? I assume you're seeing the same as what Soups has said, an increase in the volume, an increase in the sophistication. So it'll, just be...
I'm actually while AI has really helped us in so many other ways, I think the use of AI in fraud sort of scenarios is quite astonishing, but also scary. Like Soup said, deep fakes, forgeries, synthetic identities, all of this stuff. That's the kind of stuff that I think we should prepare ourselves for, and try to stay ahead of it. Like, it's always going to be, you're always going to have to pivot, and that's where solutions that are adaptable and flexible are important, because that's how fast fraud evolves. So I would say AI-enabled fraud types, but also what I'm starting to also think about is how long we can rely on device intelligence, because even now they're able to spoof that with emulators and with all of the, the privacy setting changes on Apple Pay, Google Pay, and all of these other sort of solutions. I don't know how long we could just use device intelligence, and that's something I think we should be thinking about in the future.
Thanks. And Rich, this all sounds like good business for you and for Lean as a sort of tech enabler of financial services. Where are you thinking this all goes to?
Absolutely it is, because the kind of insights and information that we can provide, we feel can really add a lot of value to the ecosystem and help prevent, along with businesses like Sardine. But for me, I think Joe touched on it, to be honest. It's the what I call the dual use paradox, which is the double-edged sword of AI. Not only can it be used to aid and abet and minimize, but equally the fraudsters out there are also employing this technology. So I think we watch this play out for the next few years, and hopefully we continue to have supportive regulators, which I'm sure that we will, that will keep us in check, and hopefully we can continue to minimize what Warren Buffett said was, what was that, Soups? The best growing industry?
Fraud will be the biggest business of all time.
Okay. I'm in the wrong business then.
No one bets against Warren Buffett, right?
All right, we're out of time. Thank you all for your participation, and good to talk to you.
Thanks very much.
Thank you.